Hi, I'm Scott Lucas with Lucas Financial Services and Wisdom Tax Group, and today is my Wisdom Wednesday message. We are right in the middle of tax season, and the biggest thing that I wanted to share that people really overlook, almost everybody ignores, is actually tax planning. So it's one thing to get your taxes done. Tax preparers actually refer that to tax compliance, meaning, getting the numbers on the right lines and getting it paid out the door. And so a lot of people just focus on, okay, make sure my tax return is done accurately. And of course, we want that. But however, for many people, their tax liability is one of their greatest expenses that they have. And it's mind-boggling to me how few people really pursue tax planning. Now, part of the problem is not your fault. Tax preparers, if you think about it during tax season, they are so busy. Their idea is, I want to get that return. I want to get those documents in. I want to get the numbers on the right line, paid for and out the door, right? They're not thinking, how can I save Joe and Susie some money on this or that? On the other hand, you have financial advisors, and most firms actually discourage any kind of tax planning. They won't let them. You just Google it. Say, does Fidelity allow their advisors to do any tax planning, and then it'll say no. And so you need to find somebody that's on the financial side and the tax side that's able to give you that advice. But it's going to make significant difference. So one thing I wanted to do was actually share. Um, this 1040 and just kind of give a real quick overview. Some of it might not totally make sense, but and just to show you all the different things that we look at on the different lines. So you got line 2A and 2B. If interest income is really high and it's being reinvested, there's other ways that we could do things in order to not make it such a high taxable amount. It could also point out certain bank accounts that are getting extremely low interest rate. Boggles my mind how many people are still getting only 0.01 or 0.2% on sizable savings account balances. Dividends, you've got ordinary dividends and qualified. If you're using that for income, you might try to focus on some things that have a better rate of qualified dividends. All the time we see people that maybe they do a small IRA rollover or transfer from one to another. They submit the return to the tax preparer and showing the distribution, but they don't tell them that they rolled it over. So they end up paying more taxes than they should have had. Also paying tax on Social Security. There's different things that you could do on timing that could actually save significant amount of money. And again, these are all things as I'm going down through here. Doesn't mean your tax return could have been done wrong. It just means that you might be doing things that are not in your best interest financially. Capital gains and losses here. So, if you got significant capital gains, maybe you could benefit from tax loss harvesting. Carryovers from here, from the schedule, could have to do with hobby or small business income. If you're a sole proprietor, you could maybe benefit from setting up as an S corporation or an LLC, and that doesn't show up as far as a planning opportunity when people are just actually trying to get tax compliance. Let's see, what else? We got child tax credits. Sometimes those are missed. The self-employment income, you can have retirement plans that might, help lower those numbers. Another thing we see, just had somebody that left here that had a massive tax refund, which would sound good. However, the problem was that they did not do their withholdings properly. So basically, they gave a tax-free loan to the government, and that could have easily been identified. And just to give kind of one crazy story, we had a lady that was paying zero taxes. She had an injury that kept her from the workforce that year, so she had almost no income. And I said, hey, we can save you some taxes. And she was, I thought you said I didn't know any taxes. I said, that's true. This year you don't, but you have an unused credit that you haven't used, that you could actually roll some of your money from your IRA over into a Roth, which would be tax-free, and use the rest of that unused deduction and not cost you anything. And so she was really thrilled. But 80–90% of the time, there is something that can be done to improve your tax situation, but you have to do tax planning. Can't emphasize that enough. and you need to focus on it. That's my recommendation. Thank you. Have a great day, and I'll talk to you later. Bye-bye.